Welcome to Alpha Insights. I'm Lucy. Today we're unpacking a familiar but important story in crypto. Real steps toward institutional adoption and technical upgrades, set against fresh regulatory friction in Washington. With me is Jessica, who watches markets and policy closely. Jessica, great to have you.
Thanks, Lucy. Happy to be here. There's a lot happening right now. Some genuinely constructive moves and some reminders that the policy picture is still unsettled.
Let's start with the big institutional news. Bloomberg says Anchorage Digital could raise about $400 million in a possible IPO. Why does that matter?
An Anchorage listing would be a milestone because it's the first federally chartered digital asset bank. In plain terms, that means a bridge between traditional finance and crypto services could be available to public market investors. If they file an S-1 with the SEC, we'll get clarity on size, valuation, and timing, and that will tell the market whether institutions are truly committing capital to crypto infrastructure.
So for everyday investors, should an Anchorage IPO change how they think about crypto exposure?
It can broaden access, yes, but it's not a shortcut to easy gains. Anyone interested should read the prospectus for risks like valuation, dilution, and business model assumptions. For people buying public shares, think of it as exposure to crypto infrastructure, not necessarily to acceleration in token prices. And remember, timing matters. Rumors aren't filings.
Switching gears to technology, Vitalik Buterin has been talking about 2026 as a year to reverse backsliding on self-sovereignty and make running an Ethereum full node easier. What does that really mean?
At its core, he's talking about lowering the barriers for normal people to run full nodes and control their own data. Right now, many users rely on third-party services, which can centralize power. Making node software lighter and dApp interactions smoother supports decentralization. That helps developers, strengthens trust in the network, and is a positive fundamental for Ether over the long term. But rhetoric needs to turn into shipped code and measurable improvements before investors should assume it will change adoption rates.
So, investors should look for concrete releases and metrics rather than lofty goals?
Exactly. Watch official developer updates, release notes, and uptake metrics, like how many people run full nodes or how much on-chain activity uses the new tools. Those are the signals that show progress.
Now, the other side of the ledger, the regulatory noise. Senators moved developer protections out of the Market Structure Bill and the Clarity Act markup has been delayed. How should we interpret that?
It signals a messy legislative path. Moving developer protections to the Judiciary Committee means more hearings and a longer timeline. Delayed markups of the Clarity Act, which is a bill that would try to define how crypto fits into securities law, mean uncertainty persists for months. For DeFi teams and institutional players, that uncertainty complicates product launches and compliance planning. In short, more regulatory fog, at least for now.
We also saw the Depository Trust and Clearing Corporation say it doesn't want to build walled gardens and is open to interoperability. Why is that worth noting?
When big incumbents talk interoperability, it reduces the risk they'll lock tokenized assets into proprietary systems. That can make institutional tokenization, think securities, funds, or tokenized cash equivalents, more attractive because it suggests easier movement between platforms and potentially lower operational risk. It's a gradual institutionalization signal. But again, watch for pilots and announcements that show actual interoperable systems in action.
Practically speaking, for investors listening now, what should they watch and what adjustments might make sense?
First, track any formal Anchorage filing or company statement. That's a near-term catalyst. Second, monitor committee schedules for the market structure and judiciary hearings. Committee moves drive rule clarity. Third, pay attention to Ethereum dev releases to see if node usability improvements are real. On positioning, be selective. Favor projects and firms with clear governance, regulatory-ready infrastructure, transparent business models, and strong custody practices. Use small, staged allocations rather than big, concentrated bets. And for public listings, always read the prospectus.
Great. Before we wrap, can you give our listeners 2 or 3 quick takeaways to remember?
Sure. 1. Institutional momentum is real. An Anchorage IPO would be a milestone, but wait for formal filings. 2. Ethereum's roadmap can improve decentralization, but require measurable progress, not just promises. 3. Regulatory fragmentation is the wild card. Policy outcomes matter more than headlines, so stay cautious and selective.
Thanks, Jessica. That was a clear and practical breakdown. And thanks to our listeners for tuning into Alpha Insights. We'll keep watching filings, dev updates, and Washington for the next moves.